So let's start. Thank you everyone for joining in, taking your time out on weekend and joining us on this session, panel discussion on careers in financial engineering. So many of you may already know that we conduct a series of webinars, deep dive with IIQF experts, and this panel discussion is also part of that webinar series. So keep following us for more such useful webinars in the future. So you can register for this webinars. We can keep conducting this regularly. And in today's panel discussion, I'm really proud and honored to have an eminent list of speakers who will be sharing their thoughts on this topic of careers in financial engineering and how the industry is progressing. So we have with us Professor Dr. Amit Punyani, we have Mr. Srijoy Das, and we have Mr. Rupal. All the panelists will give their kind introduction in a while. But before that, just let me give a little heads up on how we would go about today's session. So today's session is divided into two halves, right? In the first half, we would be hearing from our eminent panelists who will be sharing their thoughts on different aspects of financial engineering career, as well as like the challenges in hiring, and also particularly, the skill sets required and all those kind of important topics. And once we have the talk from the panelists, after that, we would open the session for Q&A. So in the Q&A session, we would be taking up all your questions and we'll try to answer every question actually. And we'll address all your doubts regarding this field, any question you have about the career or other related stuff, right? And on the questions, actually, all the participants generally in this webinar are on mute, of course, because it's like a huge set of participants. So to manage that, it's difficult to unmute everyone. But what we can always do is we always want this webinars to be as interactive as possible. So please feel free to type in your questions and queries, whatever points you want to discuss in the chat window. We'll take up all the questions one by one, right? So with that, we will start with today's session. And today's session, we will start with a little bit of introduction first. So maybe we can start with Professor Dr. Amit Punyani. He can briefly introduce himself. Over to you, Professor Punyani.
So this is, it has been about 16 years now since I joined the quant finance industry. And so, yeah, I mean, I have nothing but very positive things to say about the industry and how it's growing. So initially, most of the emphasis was on pricing derivatives. But gradually, the industry has seen fairly some new currents, and today we talk about big data, AI, and statistical arbitrage. So, of course, these things existed even then in the 90s when the first quants became prominent, but they have become more important now. So about myself, yeah, actually, I began my career at Lehman Brothers, and after Lehman collapsed, I moved to India, and where Nomura, a Japanese bank, had bought the Indian operations of Lehman Brothers, and I stayed there again 5 years or so, and then hopped a couple of senior positions, and then today I teach at a business school,
Right.
mostly things like quantitative finance and some exploring various synergies with big data. And I'm more interested nowadays in arbitrage, statistical arbitrage, forecasting, using AI methods, things like that. So, what I see of the industry is that a lot of new players have entered the Indian market. There are all these. So, for example, World Quant is
Right.
hiring from the top IITs, and they pay really, really well. And of course, Goldman Sachs has expanded like crazy in Bangalore. And of course, then we have the traditional players, RBS and JP Morgan, Morgan Stanley, Credit Suisse, Deutsche Bank. So every bank has a presence in India, which is good. And from the early days where we had IRIVNA, CRISIL and IRIVNA, there's been a lot of progress. There's been lots and lots of jobs. Earlier, there used to be more like aptitude-based hiring, but now we see people looking for specific skills, which is where IIQF comes in. So, in terms
Thanks.
of skills, derivatives pricing is one thing, but we increasingly see needs for a credit side, statistical finance skills. So statistics is quite key to doing quant finance these days, also because of big data. And of course, machine learning skills are also in demand. So with that, Nitish, should we hand over to Srijoy, or do you want me to continue?
Sir, I mean, if you, it's up to you. I mean, if you want to speak a little bit more, or
Yeah.
if you want,
So basically, just to give a very brief introduction, the
right,
financial world has broadly two categories: front office of jobs, or front office, which is directly dealing with cash, directly dealing with clients, and
right,
middle and back office, and combine the
correct,
two, which is more related, more like concerned with monitoring positions, regulatory liaison, and you know risk management broadly. So
correct,
I have my exposure has been primarily with risk management, which is middle and back office, and
right,
that has seen a huge growth in India for obvious reasons. And you see that JP Morgan, for example, has expanded the number of jobs we have here. Morgan Stanley is quite big. Goldman Sachs is quite big. So all the big players, basically, Credit Suisse, Deutsche Bank, and not only that, I think I've heard that Societe Generale, the French bank,
yes,
also expanding in India. And then there are all these small mortgage shops. So how it works in the United States and in Europe is that a whole lot of pension money gets invested in sophisticated financial securities. And
right,
so these range from simple mutual funds to more complex investment houses, boutique investment houses, hedge funds. And so what happens is that each of these requires support from quantitative analysts, because they're making sophisticated financial trades. It's not like the Indian market
correct,
where you just buy stocks and hold and they change your portfolio on a regular basis. So we have sophisticated derivative trades, and to value these derivative trades is itself a bit of a challenge, as you all know. That is the purpose of quantitative finance. So to keep
correct,
hedging these, rehedging these portfolios, you need sophisticated quantitative people, and that's
yeah,
where the Indian, that's where the risk manager comes in, the quantitative risk manager, And that's where this kind of training that we have, quantitative training, becomes relevant.
Right.
So increasingly, many funds, PIMCO, and then the ratings agencies, S&P, Moody's, everybody wants to have a presence in India. And whoever has skills, quantitative finance experience, is therefore sought after. So it's a growing market, and I can see only positives. Now, to move over to the front office is a bit of a challenge, and many people would like to do that because that's where the alpha is. So those opportunities again would be better overseas. And so, for example, not necessarily the United States, but Singapore, Hong Kong. Hong Kong is the main place where you can find hedge fund, risk management jobs, or you can find trading jobs.
Absolutely.
So this is in a nutshell about how the Indian scene is and where we would fit in.
Absolutely.
So with that, I'd like to pass over to Srijoy, and then we can continue the discussion later after.
Before we go to Srijoy, maybe like we would like to hear from Rupal. It's like he wants to share his thoughts actually regarding the fintech industry, the quant industry, and then particularly the areas in fintech development that is happening, and also some aspects of the machine learning. So first we go through the general idea about the industry, because Srijoy wants to talk more from the other side, the hiring challenges in the industry, the skill sets and all. So before going to Srijoy, probably I would request Rupal to actually please share his thoughts. If you can start with your little bit of intro for the participants, and then if you can share your thoughts.
Yeah. So good afternoon, first of all. I basically graduated from IIT Kanpur, and then qualification where I've done my MBA from IIM Kozhikode, Executive MBA from IIM Kozhikode, and then other education qualifications as well. In terms of work, I have mostly been involved in the risk and P&L team over the iBank. I was with Credit Suisse working on the investment banking domain for some time, and then some other banks. So I've worked with many people all in there as well. So coming to the fintech industry overall, I think the industry has been growing. There is no doubt in it. Even after 2008, I think when we saw the payment crisis, was that even the industry has grown further only. We can't say that and it has shrunk, but it has grown, and the regulation area has grown even bigger. Now there are more regulations, and when more regulations come in, more people are required to do the analysis. And I think even regulations aspect require better managing your risk and better managing your exposure in what kind of instruments that you are holding. So when we talk about this overall fintech industry, tech is one part and finance is one part. And I mean, a person who is to be hired in the industry or who is required in the industry, the better is that she has the basic, I will not say basic, but the more advanced you are in both the areas, the better it is. Now, these days, it's not possible that someone who's just plainly having a knowledge about options trading, futures, how to trade in them, how to get exposure in them, is going to be fully successful. Not someone who is completely tech, like say you know about random model, you know about all these different kind of regression models. You might be knowing all of them. You might be knowing the implementation of them in Python, but still, where to implement it?
Absolutely.
So a mix of those is definitely nowadays required. That's what we are calling this booming industry as fintech. Now, I mean, you should be learning both, and that's what I think IIQF offers. Probably that it offers both a tech as well as a domain expertise. Both of them, I think, are required, and that is being equally well offered here as well. I would say in tech, you shouldn't be going to the very advanced level of building a website or things like that, but at least the tech from modeling and calculating perspective definitely is required.
Sure.
Now the credit side is increasing. Within the credit domain, I think machine learning is taking a lot of way ahead. The reason is probably the more and more we want more CIBIL scores. We don't want just one CIBIL score. I think more companies are coming up. They are doing more of these technologies of artificial intelligence, like random forest. I'm just mentioning it too frequently because it is being widely used nowadays. Are different types of regression models, you know, and all these ML models are being used extensively just to ensure that the practice is more robust.
Absolutely.
The practice is more robust, and by using that more robust practice, we can better find out the creditworthiness of people sitting out there, and the banks can provide their loans, take the leverage, and earn profit. Now, basically, when we talk about fintech, it's on the two sides. You don't have to be either very safe, but you don't have to take either of too much risk. And that thin area where you have to be taking an ideal risk and sitting at ideal exposure is where I think you have to get all these maybe machine learning algorithms or all these techniques, all these modeling, all this comes into that thin area of neither having too much of risk or exposure, but neither being just taking all the full leverage, like the subprime crisis, giving loans to anyone. That shouldn't happen. But not giving loans to anyone, that also shouldn't happen. These are the two extreme cases. And now the best fit, how much loan to which person, I think the analysis or the calculation of that requires all the kind of techniques that are coming up. And it's not only in credit area. I think even in market risk, if you see now all these discount brokers that have come up, basically, if you see their risk management system, how are they doing? So, I mean, once you have understanding of all these machine learning techniques plus coding plus some knowledge about the domain, that this discount brokers coming up, discount brokers also are a niche industry where you think of yourself. I think this complete package is being offered by IIQF in its courses like QFRM or AMFE. Probably on those, if you makes you a best fit for even these kind of new brokers that are coming up on a daily basis, because their risk management systems also require a lot of calculations on a daily basis. They also want that the people who are trading into their system with the least exposure, they can trade into the preferred technologies, be it like, for example, short a call option, short a put option. So if you have that kind of position, the risk management should take those hedges and the positions into consideration, and then go on with the proper calculation so that more exposure can be given to you. So they also don't want to be too much on the either of the side, like taking full of risk or not taking any of the risk. So I think among all these things, probably the courses like this come into play, where you should have a technical hands-on experience in coding languages as well, somewhat more into database as well, somewhat a little bit of Python, somewhat basic understanding of how to code all these. Because unless until you don't have paper, where will you write? You have ideas in mind, but you should have pen and paper to write it down. It's just that simple example. If you have ideas of domain and you have ideas on how to generate PNL, you have ideas on how to generate alpha, but where do we write the code? So basically, that's where I think tech is required.
Very true. Very true. Thanks so much. Thanks so much for actually. It's like very useful thoughts, and we'll come back more to it. I mean, while we're addressing the questions now, like we'll go to Srijoy now. Srijoy would be speaking, as I said, more on the other side of it, the hiring challenges part of it, and on the skill sets required. So over to you, Srijoy.
Yeah, thanks, Nitish. Good afternoon, everyone, and really thank you all for having me here today. I'm also a financial engineer, and I been in the industry for 16 years now. So in my current role at PwC, it's focused on the consulting around the practice of market risk analytics for our clients on matters related to derivative pricing, valuations, counterparty risk, VAR, and the regulatory issues, some of which Amit and Rupal also touched upon. But I would mention, let's say, FRTB and LIBOR transition, to name a few. I also lead a team at PwC that delivers risk modeling services in model risk management, such as model validation and model audit. So that's a bit about me. Really excited. I mean, I've been listening to Rupal and Amit, very interesting views. So Nitish, let me perhaps talk a bit about the drivers for demand, and then I can move into the challenges for what I have sort of seen when it comes to hiring for the industry.
Sure.
I actually my job has been made much simple by Amit and Rupal, because essentially the main drivers in my view, Nitish, where the increased use and reliance of models, as we are seeing, right? And I think Rupal has been referring to that as well, and as well as Amit. The growth of the expansion of models, and since 2008, I would say we have seen. I would say not even 2008, even back in 2001 or so. Since then, I think we have seen increasing, sort of growth and expansion of the modeling industry, and the use of these models by the banks, hedge funds, asset management companies, and insurance companies. So that is here to stay, Nitish, and I think it will only keep growing into the future, right?
Right.
And of course, a related point is the regulatory reforms. I think Rupal touched upon few. I would say LIBOR transition, initial margin, then FRTB. So these are going to drive the requirement for quant skills and the the need for models in the financial services industry. A good example from the past is CCAR, right? I think CCAR created so many jobs, so many quant jobs, because it extensively uses statistical techniques and data science techniques. It's a good example, right? And I would also say that one of the third drivers, in my view, is this AIML, fintech that Rupal talked about. In addition to what Rupal said, I would also mention climate risk modeling. So this is an emerging practice area. Absolutely. And I would say all of you should stay tuned and keep an eye out, because the standards are evolving, the techniques and are being set. A lot of policies are being set in this space. So these are some of the areas like AIML, climate risk modeling, data science, which are going to drive the need for quant skills, not just for the current phase, but also going into the future. Now, as Nitish said, I mean, what are the real challenges in my view, in terms of what I have seen over the last 10 years while leading projects and delivering various kinds of services to our clients and to the banks. In my view, one big challenge I've always seen, whether it's London, New York, or whether it's Mumbai or Bangalore, as Amit said, global and India. More so in India, I would say the supply pipeline has always been weak. There's always been kind of unmet gap between the supply and the demand. So I don't know the reason for that, but this has been an observation, has not changed over the many years that I've been in the industry. The second thing I want to mention about in terms of challenges is the lack of readiness. And Nitish, this is a very important point, because in my view, I've seen that it requires, especially for someone to transition from the academics to the industry, right? So that readiness is very essential. So somebody who can sort of move into the industry quickly, and industry works in a different way compared to, let's say, the university, right? So you have studied in the university, now you have to apply your skills, but then you have to think about the pressure of time and the money, right? And you have to do things quicker, faster, sometimes cheaper, and also find a solution, right? You don't have the luxury to, let's say, think about many years to arrive to a solution. And this readiness is extremely important aspect. So 1 in 5, 1 in 5 are really sort of, I've seen 1 in 5 is the kind of hit ratio, or rather the selection ratio when it comes to selecting people based on this criteria during the interviews.
Correct.
I hope that this particular aspect improves over time. Now,
Right.
how can this, these challenges be met? And there are many, of course, solutions there, but I think the top two I want to touch upon is one is upskilling. I always, Nitish, I always advise my junior associates and everyone to keep upskilling. That has always
Correct.
been, my secret sauce for success. And the thing is, even research has shown, Nitish, that if you keep upskilling, it gives you the confidence, right? And also, empowers you with better skills. And these, the skilled folks are less likely to leave a firm, and they seek for promotion, and they want to get deliver more, take up more challenging projects, and stuff like that. So that is one. And then two, what kind of upskilling opportunities are there? I mean, from PwC side, I can say that we have a mix of learning interventions like classroom courses. We have tie-ups with Stanford. We have tie-ups with various Indian business schools. So we have these virtual trainings as well as on-site trainings in financial engineering topics, ranging from the simpler ones to the very complex topics.
Right.
We also have, we also encourage our team members to go for certifications like FRM and all that, and and access to self-learning platforms like Coursera, Udemy. So there's all this bunch of host of tools available to keep upskilling and training oneself.
Correct.
I think I'll stop. I'll pause here, Nitish, and maybe we can have open the floor to other panelists and hear more views.
No, so thanks all of you for sharing your brief thoughts about the industry and the requirements and how it is progressing. Of course, we'll have more questions. A lot of questions has come up. We'll take the questions as well one by one during the Q&A session. And but before we go to the Q&A session, we'll take a little bit pause, and I would request the audience to allow us to actually also share a little bit about the work that we at IIQF are doing. We have been promoting education and upskilling in the field of quantitative finance, financial engineering, risk management, algorithmic trading, and all these areas. And in fact, we are, since Rupal and you both mentioned, right, the machine learning and all these areas are, increasingly becoming more and more important in our field. So we are even coming up with specialized skill-based courses in machine learning in finance. We want to focus more. Machine learning is something which is already there in all the courses that we teach as one of the modules. Now we are planning to bring specialized machine learning modules in terms of as a specialized course in machine learning and its application in finance. So a little bit about ourselves. I'll give a little bit intro, and post that we will take up the questions one by one. So brief about us. As I was mentioning, we have been the oldest and the most established body in this field of quantitative finance in India. We have been doing education, training, and consulting in this field of quantitative finance and financial engineering, risk management, quantitative algorithmic trading, artificial intelligence, and machine learning. We were founded by pioneers in India and top experts from the field of financial risk management, financial engineering, investment banking. And we have been conducting these specialized courses, both as open house certificate programs and of course as customized corporate programs as well for all the international banks and other financial institutions, right? So we have a few broad-based certificate programs of which covers these aspects of skill building that all of our eminent panelists has been speaking about in the field of quantitative finance, financial engineering, and algorithmic trading. So we conduct about 5 courses at this point of time. Anybody who is interested in entering into this field of international banking, hedge funds, the financial institutions, particularly in this side of the industry, the quant industry as it is known. So if you're looking at an entry into this field, or if you're already working as a part of this setup and you want to further deep dive and go deeper in terms of like knowledge base or skill set, then these are courses that we conduct. I'll briefly touch upon the courses that we do. So we have a course called Certificate Program in Quantitative Finance and Risk Management, 6 months course. Yeah, before going into that, all these courses that I'm talking about, these are all weekend online live lecture based courses. So this you can do along with your job, or I mean you can do along with any full-time degree program that you are pursuing. So you can do along with your job or your other programs that you are pursuing. So yeah, coming back to the course, so this is like the certificate program in quantitative finance and risk management, CPQFRM, a 6 months course on the weekends, a very comprehensive course which deep dives into both theory and practical modeling for derivative valuations and risk management. Then we have a course called Certificate Program in Financial Engineering, which is about 7 months of actual lectures plus 4 primers which are given to brush up. And primers are essentially optional primers, and those are in the recorded format. The main course is of 7 months, a comprehensive course which deep dive into both theory and practical mathematical modeling for derivative valuations and risk management. A more deeper or heavier course in terms of like the mathematical modeling. Then we have a couple of courses in the area of algorithmic trading. We have a 6 months course, postgraduate program in algorithmic trading, which teaches all aspects of algorithmic trading using technical analysis, machine learning, and quantitative models. Then we have a shorter certificate program in algorithmic trading, where we teach all aspects of algorithmic trading using technical analysis. And all these courses actually, the major implementations and modeling we teach in Python. So for if you're doing the courses or the 6 months, 7 months courses I talked about, then in that case, the Python module is given free of cost, the basic Python module. It's given as a primer because we use Python, and if somebody does not know Python, so then we encourage them to join the courses at least 3 months before and use the Python primer module to brush up on the basics of Python before they go into the actual lectures. And if somebody wants to start off small by taking small steps, they can even separately join the Python programming for finance, which is the Python primer module. In that case, of course, it's a separate fee chargeable, but if it is part of the course, it is free of cost. Now, if somebody wants to start small, then they can join this, start by joining the Python programming for finance course. This is like a self-learning course, so essentially you can start with that. And we are also a proud partner with University of Stirling, their Ras Al Khaimah campus. So we are their admission partners. So essentially, this is like a very, they have 3 master degree programs, which are all targeted at working professionals. These are degree programs which you can do by attending weekend lectures. Yes, couple of times you'll have to go to their campus just for taking the exam. So for example, if somebody is joining the September cohort for these programs, then in January and April for 4 days each, you'll have to go to the campus to take the exam. Otherwise, you have an option. You can either attend the courses from India or wherever you are through online lectures, or you can actually, of course, go and attend in their campus as well. So they have a flexible mode of attendance. You can attend physically or through online as well. And you can do it along with your jobs, or as I said, so essentially it's like meant for working professionals also. And again, intensive opportunities are provided based on your location. So if you're in India, they provide you intensive opportunities here in India. If you're in UAE, in the campus, they provide opportunities, intensive opportunities there. And more importantly, you can opt for placement both in India or UAE, right? And these are courses, UAE campus courses are offered at a much waived off fee compared to the same course that is offered in their UK campus. So if somebody is interested in like pursuing this, any of these master degree programs, so they can separately get in touch with us, and we will forward your application. Right, so yeah, it has been like a long, wonderful journey of more than 12 years now promoting education and training in the field of quantitative finance. We have had a lot of wonderful participants over the years. A lot of them are themselves very senior from the industry, and they have, I mean, a lot of people, when they joined the courses over the last 10 years, they have grown in the industry. So many of them have shared their wonderful feedbacks and testimonials. Just to I mean, it is not to showcase our course, but just to mention that like these courses are really useful for somebody who wants to build a more deeper career in the field of quantitative finance and risk management. So yes, there have been, I mean, there are many more if anybody is interested in looking at their thoughts they have shared in the website, in the testimonial page. There are videos, and of course you can just to show that like how you can utilize our courses. I mean, not to advertise, and of course as all the eminent panelists speakers has been mentioning about the jobs, the industry. But just to summarize, if you are looking at jobs in hedge funds, examples being Renaissance Technology, GE, Citadel, or Millennium Partners, investment banks like Goldman Sachs, Morgan Stanley, Deutsche Bank, commercial banks like JP Morgan, Citigroup, Nomura, or stock exchanges like NYSE, NSE, all the consulting firms of PwC, which Joy works, and then all the others also, EY, Deloitte, even the consulting firms, they are hiring like in a huge scale nowadays. And also, of course, the IT companies, because companies like Accenture, Cognizant, TCS, Infosys, and all these people, these companies also, they have teams which supports the banking industry. So a lot of jobs to be had, and the kind of positions you can be targeting by doing this kind of courses are like in the profiles would be like quantitative research and analysis. You can be developing quantitative and analytical software. You can be part of the valuation modeling team, modeling teams, the valuation teams. You can be in the model validation teams. You can be doing portfolio management. You can be doing portfolio analytics. And of course, all the areas of financial risk, market risk, credit risk, operational risk, liquidity risk, structuring of derivative products, quant trading, HFT, that is high frequency trading, algorithmic trading, all other kinds of algorithmic trading, derivative trading, and all that. Yes, just a small synopsis of like the clients and people we have been fortunate to work with. Some of the names, I mean, it's like a huge set of names, but just to mention few of them. And yes, we have even conducted courses for educational institutes. Just like to briefly mention few: IIT Bombay, BITS, Pilani, and NITI. So that's like a brief introduction about us. I mean, anybody who is interested in upskilling in this area, since it's like a talk on careers in quantitative finance and the skill sets required. So I just thought that I'll mention the work that we also have been doing. So if anybody is interested in like getting in touch with us, if you want to discuss about the courses or any discussion in general, we'll be happy to discuss. You can get in touch with us through this contacts of ours, our website iiqf.org. You can call us on this number 976986051, or you can email us. Right. So yeah, I think that's like a lot about us, and as I said, we'll be happy to discuss more if anybody is interested. But now we'll open the session for Q&A, and we'll take up the questions one by one, and then I'll request each of the panelists to answer. I'll be moderating the questions. So the first question comes from Anil, and Anil, he is he's a chemical engineer by education, and he works in pharmaceutical engineering industry. But he wants to change his career to financial engineering and explore career opportunities in this sector. He is very interested in mathematics. So any suggestion for him? This I would request Srijoy to take up. Srijoy, we can't hear you.
Sorry, I was on mute. Yeah, Nitish, I think that's a great question. Many of us, I don't know, Rupal, we come from engineering backgrounds.
Correct.
I'm electrical engineer, so of course I forgotten what electrical engineering is after entering into the world of finance. But yeah, I think to answer your question, Anil, there are a couple of options you have, right? You can take up a financial engineering degree, A. B, you can continue working and then take a certification program like IIQF, likewise, and then keep sort of, upskilling yourself, and then start trying for opportunities within the financial services industry. Right. So I think the latter option works very well because especially when I look for candidates, I look for core technical skills combined with a good knowledge of industry domain, let's say whether it's risk management or whether it's pricing or whatever. So and the business aspects of it. So many of these things won't be available through a university program. There are some very targeted, right? Nitish, you can maybe talk about that, but there are some very targeted programs where there are very few in the world that really sort of focus on, especially focus on core financial engineering and all the other aspects around it. So, but I would say the option B, option 2 works out better because you have a basic degree, right? And then you are essentially building on top of that and adding your knowledge, the technical knowledge of finance, modeling, programming, and all that, and of course the business aspects about the financial products and all that.
Correct. Right. Yes, absolutely, Srijoy. I mean, Anil, as Srijoy rightly mentioned, the first step would be to actually build your skills, upskill yourself, and get the domain knowledge. Once you do that, of course, the world is open. You can start applying for this kind of positions. In fact, actually, for our courses, we also do help with the placement side. So yes, but yes, the first step is to skill yourself in this industry. The next question is from Karan Bhatia, and he says he works as a volatility trader in a hedge fund, and he wants to gradually move towards either market making or systemic strategies. So this question, who would like to take? Srijoy or Dr. Punyani, would you like to take this question?
Let Amit take it first. Maybe I can add on to him.
Yeah, absolutely. So Dr. Punyani, if you can share your thoughts on this question that Karan has.
Sure. Can you please repeat the question?
Yes. So this is a question from Karan Bhatia, and Karan works as a volatility trader in a hedge fund. He wants to gradually move towards either market making or systemic strategies. So he wants our advice on that, what he should be doing.
I think, Karan, given your position, I think you should be giving us advice. But I think you're in a fairly good position. But this is more like shop talk that you can have with peers. I think our forum here is designed to help people who are non-experts in quant finance. So I think if you want to move towards market making, you'd have to speak with us as peers rather than as mentors. I think you're eminently qualified to solve.
True. That's
that's a great point. I think I know some examples from my own life experience. Some of my colleagues who were working in the middle office, they transitioned to front office, roles like market making and trading. It was not easy. It was very tough, Nitish. But I think best way is to find a good mentor, especially a trader that you would know in your own job, in your own company right now, or maybe in the industry. It's good to network. There are a lot of these industry webinars and industry seminars happening around, focusing on topics in market making and relevant stuff to the front office issues. So you can network with your with folks in those kind of forums and try to be more proactive. And one thing I can say that having worked in the consulting space, networking is not just I mean networking has to be done in a more strategic manner.
Correct.
So try to sort of chalk out a strategy, target your mentor, and then work to a plan. Let's say a 1-year plan, about you transitioning from your current role to a market making role.
True. Rupal, you would like to add anything to that?
Yes, I know a few hedge funds which are already working in this area. So probably just directly better to reach out to them. So rather than Millennium has just been introduced in India. They are building a team in there. I think you can talk to the person in there. Cube is a hedge fund which is in Mumbai. I think they were primarily into systematic market making. Still, they are into systematic market making, sitting out from London and Paris. But they have a team in India. I think you can gradually join their team here and probably join the QR team and the quantitative. From there, can move on to the team sitting in London and Paris and directly work on these strategies. So just to name these two, but apart from them also, I think as Sujoy pointed out, probably there may be many other hedge funds which will be working in this area. But definitely, primarily these two, and especially the Cube which is in Mumbai, definitely that is working in systematic market making because I was myself part of it some years ago. So I know that they are into this. Index arb, index rebalancing, all these kind of things.
Right.
So check with them.
Right. Yeah. So I hope that answers your question, Karan. And you can put up a follow-up questions if you have, and we'll take up later on if you have any follow-up question to that. But before that, we'll move on to the next question. This is from Tuhin. And Tuhin works as a chief manager in Export-Import Bank of India in the IT domain. And he wants to pivot. He says, I want to pivot my career towards a mix of finance and data science. So this question I would request Rupal to take up, and then of course Srijoy and Dr. Punyani can also add to it.
I think that if you are working in IT team already, so you are already aware of the IT things, must be aware of software and all. Now the target that you have to put is for, joining some course which provides you with a domain understanding and domain knowledge. So I mean, nothing to popularize, but definitely our courses like CPFE and QFRM suits the best in that area. I think join these courses, mix them with the IT knowledge that you have, and then start applying to any of these banks like Deutsche, Morgan, or any of these Credit Suisse, Citibank. These banks are definitely hiring a lot of fintech guys which should have understanding of both of these two.
Right.
So that's this mix is definitely being required a lot. So I mean, just join some course, take a 6-month or a year regular course, make a basic understanding of all these things. Of course, these courses provide very advanced knowledge, but even if you grasp the basic part out of it also, that also should at least get you into the industry. Now, moving up in the industry, you should be aware of the overall full knowledge.
True. Right. So anything that Dr. Punyani or Srijoy you want to add to what Rupal has said about this?
I would say Rupal covered it very well, Nitish. Only thing I want to maybe mention here is that if I didn't get the full background, didn't catch the full background, Nitish. If the individual is working in a
sure.
bank.
So he works in the IT team of Export-Import Bank of India. He's a chief manager there, and he actually wants to pivot his career towards a mix of finance and data science.
Yeah, as Rupal said, I think some of the big banks like JP Morgan, Citi, and Goldman Sachs, they have an internal mobility program. So one option, one strategy is you can take up a technology role in a big bank like Citi or JP Morgan, and then maybe look for some internal mobility because all these positions are always sort of advertised within, right? And then of course you have to upskill yourself, and then maybe take a FRM kind of certification, and then make a strong business case for yourself to apply
True.
for those kind of roles.
Very true. Very true. So, Dr. Punyani, would you like to add anything, or before we move into the next question?
Yeah, I think one thing to keep in mind when you think of transitions is also seniority. So if you already have a lot of seniority, then how do you fit into a new role? Something to keep in mind. But other than that, yeah, I don't think I have that much we could say actually.
No, that's a very valid point, Dr. Punyani, that you have put up. Yeah, I mean, this is something we also, while discussing about our courses for people who inquire about our courses, we also actually try to mention this to them, that like, again, if you are coming from a different background, and if you have worked for too long in a background which does not have any it's not have any relevance to the financial engineering industry, then sometimes transitions can be difficult. You are absolutely right. I mean, if somebody is from a pure IT, then also transition is possible. But if somebody is from like a totally different background and like trying to transition, yeah, it's a challenge. Absolutely aptly put.
I think in those kind of scenarios, Nitish, it is better that if somebody tries to grow in the same organization, and maybe
Correct.
take new areas which are more quantitative or have some more applications of data science, right? So
Correct.
a lot of Indian banks are actually diversifying into fintech products. So one should be looking for those kind of opportunities, and that's where I think this upskilling can really help and can be leveraged, rather than looking for a associate type of role in PwC or JP Morgan or somewhere else. That would be, as Amit says, it's very tough, because the seniority criteria will kick in.
Correct. But again, at least in Tuhin's case, he has been like working in the IT domain in the finance sector, and once he has the domain, his case is much better than like somebody who is from like a very different background. So I have seen people like him at least making moves. I mean, if they have gone the domain. But yeah, as I said, if somebody has like a very different background, it's difficult. But Tuhin's case is a little better. So if he has the skills properly, he still has a chance, and if he has a real interest. Now, going into the next question is from Pranav. Pranav works in BNY Mellon as a data management and quant analyst. He has done his postgraduate in mathematics, and actually he has already enrolled for the next cohort of the certificate program in financial engineering, the July batch that will be starting. But he wants to know more about career opportunities in this field. So yeah, I mean, this actually, Dr. Punyani, if you can address a little bit, though you have already mentioned this in your initial talk, but if you can also guide him a little bit more to answer this question.
Yeah, can you please repeat the question?
Sure. So the question is from Pranav. Pranav works at BNY Mellon as data management and quant analyst. He has done his postgrad in mathematics, and actually he has also enrolled for the certificate program in financial engineering that we conduct. He'll be attending our next cohort, which is starting
I got
from.
that, but what's the question? What's the question?
Yeah, question is wanted to know more about career opportunities in this field. So he wants to know a little bit more on that.
Okay, so most of the jobs would be for you would be in risk management, or if you get lucky, then probably in the front office somewhere in sales or structuring or trading. So with BNY Mellon in India, it's possible, I think, to go into other things like operations as well. So yeah, I mean, having a quant background would help you, for example, in valuations, valuation control as well. So there would be lots and lots of positions in any bank, in any Western bank, because they deal a lot with complex derivative securities, and it always helps to have somebody who's qualified to deal with them. So I would think your best bet is to wait and watch within the firm itself, within BNY Mellon, because they have lots and lots of good jobs. Also, looking at your background, it may also work, it may also make sense to look for a senior job, a vertical growth, because the higher you grow, the more, the broader your role also becomes. So you could also tailor your role a little bit better. So I would say, yeah, I mean, this is a great option to continue studying quant finance here with us and continue looking for jobs within the same organization.
Correct. Correct. Sure. Sure. Right. And so, like, moving to the next question, which is also a career guidance from Kirti Kairon. So Kirti is asking, like, she is a postgraduate in mathematics and FRM level 1 candidate. Would like to know about opportunities in financial engineering field. So Dr. Punyani has already addressed this question, but like maybe Srijoy and Rupal, if you both can add a little bit to this. So was I audible, Srijoy and Rupal?
Yes, Nitish. Yeah. So can you just repeat it? What?
Yeah. So the question was from Kirti. Kirti says she has done the postgraduate in mathematics and she is an FRM level 1 candidate. Would like to know about opportunities in financial engineering field. So just a little bit, maybe guidance.
I think,
Already Dr.
yeah.
has spoken. Yeah.
If it's at a junior level, then there will be many opportunities as analysts, which I already pointed out, analyst and the top level, that you can get. I think being at a junior level, it is. I think all the domains are open. Maybe risk team, maybe the QR quant research team, or the product control team, valuation team. There are multiple teams which you can join, and I think be a part of them. All of them must be looking out at almost the same skill set, where you must be having some understanding of. So if FRM1, as you pointed out, you are a candidate of that. So clear that I think that will still showcase, or the syllabus of that still tells that, I mean, you are apt for it. But apart from that, I think upskilling your game with any of the courses which IIQF offer, especially the CFE, I would recommend, because that will include some part of tech skills also that are required definitely in the industry these days. Once you have the addition of that tech part, I think the ride will be very smooth in any of these banks or hedge funds coming up. So probably you can start working on that space.
Sure.
I'll just add a bit to what Rupal said. I only emphasize the tech part. I think Rupal is very right on the point. I think in addition to your mathematics and FRM certifications, if you have the tech skills, for example, Python or some R or SAS, that will really enhance your case when you're applying to these various junior level roles in consulting firms or in banks or insurance companies. So I think she doesn't have to be very specific about choosing a credit risk career or a market risk career per se, or ops risk. She can be agnostic, but I think she should. She should definitely try to enhance and strengthen the tech skills.
Right. Sure. Thanks so much. So next question is from Shravan. Shravan recently completed his PGDM, 3 years experience in financial markets data management to make a career in quantitative finance and risk management domain. Skills required for the roles, how to start learning those skills. So Shravan, this also actually has mostly been answered in the previous questions, but maybe just like Srijoy and Rupal, if you can both add a little bit. Was I audible?
Nitish, can you just repeat that question?
Yeah, sure. So this is a question from Shravan. Shravan has recently completed his PGDM and has total 3 years experience in financial markets, data management, and wants to make a career in quantitative finance and risk management domain. So he mentions what are the skills required for the roles and how to start learning those skills. Shravan, it would have also been helpful if you would have mentioned your undergrad, because in our field, actually, your undergrad qualification also matters again. So essentially, if you are from a pure finance background, then again you can take only a certain kind of roles. If you are from a engineering background, you can take a certain kind of roles. If you are from a mathematical background, so depending on that, actually it would have been easier to make a suggestion. But nonetheless, overall we have some idea, so we'll try to address that question. So yes, Srijoy and Rupal, one by one, if you can add to it.
I think Amit did answer for someone else. I think that answer really applies here as well, in my view. But maybe Rupal can add more.
So I mean, yeah, quant finance, I think, understand a little bit more on the trading side, especially quant finance that you're looking for, and I mean, any of the tech languages that you can think of, Python, SAS, R, but I would prefer Python. I would suggest Python because that's being widely used in the market these days. You can get a lot of material available in the market these days for it. And I think we also have some courses being running. I mean, it's not that only IIQF, but other institutes also are running these courses. And I mean, Python is widely available, widely being recognized. You can join any of the courses. I think the faculty is best, and I think you can go ahead with the that learning of tech, and I think that should do the work for you. But if you only have understanding of financial markets, then I think somewhat more upgradation in that side of financial markets plus a tech shall be helpful. Something again I would suggest like CFE, wherein you get more of technical aspect as well, plus some enhancement on the domain side, understanding of the domain side, and the amalgamation of the two, which we usually take up in the class. I think that should be really helpful.
Right, absolutely. The next question is from Bitesh Chaki. So he is a maths graduate with an MBA from a tier 3 college, and he has 5 years experience in risk reporting operations in one of the largest asset management company. So he says, I do want to transition to a model development role. So want to understand what are my possible career paths. Is it even possible without a tier 1 college tag in my CV? So Professor Punyani, if you can actually start addressing and guiding in about this. So he says that. So could you hear my question, Dr. Punyani? Hello. Hello. So I think he actually is not able to hear, but it's like Srijoy, would you like to give a little bit guidance to this person, Bitesh? So he has, like, as you mentioned, he's a maths graduate with an MBA from a tier 3 college, he says, and he has 5 years of experience in risk reporting operations in one of the largest asset management company. So he wants to understand if he wants to transition to a model development role. So what are his possible career paths, and is it even possible for him to move into this field without a tier 1 college tag in CV?
Yeah, Nitish, I don't know what tier 3 is, or tier. I mean, honestly, it's a debatable thing. But yeah, in my view, two things. One is Ritesh, if he wants to get into model development, he has to strengthen his technical skills, right? So as Rupal earlier said, it has to be something either Python or maybe Python should be the preferred. And as a developer, I think the skills, the technical skills are even more emphasized. So maybe a certification, an advanced certification in Python, and having done some projects. So either, I think I was coming to that. So you should either take up a IIQF certification. We have some. I mean, Nitish, you can talk about some courses where we give them projects, right? term projects where they have to implement a model or implement some sort of quantitative model, either a pricing model or a VAR model. So that would definitely enhance his chances to apply to this model development role. And the second point I want to say is, if he's already working in asset management firm, if they have roles internally advertised, if they have developer roles, then I think that would be the best place to start. And also, he can maybe take a look at the job description and try to identify what are the core aspects that are essentially required on that particular role and job. So that will again help him to at least understand his gaps, right? What are they? So overall, I would say tier 3, tier 4 doesn't matter. If you have the experience, if you can prove, right? If you can prove yourself on the job or prove yourself during the interview, then I think rest of the stuff doesn't really matter. Once you're into the industry, I don't think, Nitish, your years of the industry matters more than your earlier qualifications.
True, absolutely, wonderfully summarized. Rupal, you want to add something to that?
Yeah, definitely. So first of all, I would like to add that model development, there is a lot of crowd that is running these days to enter into model development. So rest assured, there is a tough competition going in there. So that is the first thing that you should understand. And now the second thing is, of course, it doesn't matter much tier 1, tier 3, but definitely tier 1 has a little bit advantage compared to tier 3. Being, of course, first your CV reaches, then you reach there. So of course, in CV is mentioned, but still, it's not that. Only though they will get the opportunity, everyone gets the opportunity. It's all about getting an interview call, and I think after that, it will be a fair game for both, as Jay pointed it out. It doesn't matter after an interview call whether it's a tier 1 or it's a tier 3. So that is the second point. And then third is model development. If you have not got anything on it, I would suggest that join some course, or if you're not joining, then at least start doing something in model development in Python. Start building models. Read about models. Start building those models, like VAR model using Monte Carlo simulation. Try to build these models so that whenever a chance comes to you, it shouldn't be like you are at a very nascent level. Try to tell them that even though you are not part of that work, you have still developed it on your own, from your own understanding. Take some data set and implement your models in that data set. And try to get results, show the results. I think that will show your interest and will land up here in a job. But definitely, there's a tough competition going on in model development.
Correct. Right. So, Dr. Punyani, if you are able to hear us now, would you like to add anything to it before we move into the next question? Anyway, I think that question is well answered already. In fact, the next question is also answered. Sohit mentions that, is someone not from IIT do have career in this field? So Sohit, I believe the same. It is a similar question to what Bitesh asked. So yeah, I hope you have got your answer by now. So it is, of course, there is no denying or the fact that if you come from a premier institute, it is not about only in this field, right? It is about every field that you have an advantage. Nobody can deny or debate that. That is why people struggle and make so much effort to get into the top institutes. But that does not mean that your life stops if you are not from a premier institute. You always have opportunity as long as you are building the skill sets, right? So if you have skill sets, yeah, your path might be a little tougher, very honestly speaking, compared to if you have a IIT or IIM degree. How can anybody deny or debate on that? But that does not mean that people from non-IIT or non-IIM background are not making careers. See, nowadays, particularly our industry is totally a knowledge-driven service industry. So more knowledge that you build, the more chances of your success is. Initially, yeah, there might be pay disparity. You may you may struggle to get into the industry, but once you build the knowledge set, then again your chances increases. And once you are part of the industry and you keep building your skill sets, you keep upscaling yourself, as Rijoy and Rupal and Dr. Punyani also mentioned, right? So essentially, as long as you keep acquiring the right skills, at some point of time you would reach a parity, right? And again, everybody can make a career in this field as well. So it is more about what skills you are adding. So if you are interested in this field, and if you are not from IIT IIM, then particularly it is even more important that you actually do some extra courses and all. I'm not necessarily saying that you do something from IIQF, but you build the relevant skills. Once you build the relevant skills, for an IITian, the advantage is, even without a relevant skill, if they are like a fresher, and then like Goldman Sachs will go and hire them. But for a non-IITian, I mean, you may not get the same opportunity as a fresher. But if you add the skill sets, right skill sets, I have seen a lot of people actually getting an entry, and once they have made an entry, I have seen people growing very, very fast. So yeah, it's like more of you acquiring the skill sets, particularly in this industry. These are actually all knowledge-driven industry, right? So I hope I either answered your question.
Yeah, I think Nitish, I'll just add one thing. It's just a motivational point. I, Amit, and Rupal come from a very different generation. Those days, I mean, there were 4 IITs, but this generation is very different.
Correct.
And it just happened that we are from IITs. At that time, we were getting those opportunities. It's just you know, it's just the time thing, right? The time and place thing. But nowadays, we have so many universities offering tech degrees. IITs are offering professional, degrees to professionals. So you don't have to go through the the BTech, JEE and all. They have various other courses at executive levels. So you can take some of those IIM courses or IIT courses. And of course, there are more universities and colleges offering these kind of financial engineering degrees and related programs. So this generation is very different from our generation. It's just that it happens to be that we 3 of us are from IIT in this panel, but you know, it's.
And one more point that I would like to add, when I was preparing for JEE.
Sorry, go ahead.
One more point that I would like to add. I mean, when I was preparing for JEE, but there was one very clear faculty. So some of his friends went and met him that we are going to give the exam for JEE, and we are not sure whether we will clear it or not. So that time he mentioned one point, that all IITians are not successful persons, and all successful persons are not IITians. So always keep that in mind. I mean, it may be possible that most of IITians are successful, but not all. And maybe it may be possible that, I mean, few of them are very successful, which are not from IIT. So at a very initial level, it may matter, but in the future course of action, how you perform in the industry matters a lot.
I agree. I completely agree with that. I think you also said the same thing. It's once you are into once you have crossed the gate, then it doesn't really matter whether which college you are from. All that matters is your performance on the job.
Absolutely. Right. So I mean, just to maybe cheer this people up. My best friend is actually a commerce graduate, and he did his MBA from like as you call it's not top tier 3 college, but definitely a tier 2 college MBA. Like he has been working as like a very successful quant trader for quite some time now. He worked with the best of the international banks. He was in Deutsche Bank in India last, and then again he was sent to Singapore. So he's currently in Singapore, and he's not only not from IIT, he's not even from an engineering background. He's from a commerce background, right? So again, it's, as I said, it's more about how you acquire the skill sets once you are through the gate, as Srija rightly pointed out. And so next question is from Rajiv Das. Rajiv Das is actually a senior manager in Bank of India, and Rajiv is doing our CPQFRM course. So there is a specialized batch, just to mention to all the participants, since I'll be addressing Rajiv's question. So there's a specialized batch that we conduct, a customized CPQFRM batch that we conduct for Bank of India actually employees, where they select their participants, and then they will conduct a customized program for the Bank of India officers and employees, right? So he's part of that course. So that's what he mentions. So he's already doing, he says that I'm already doing the QFRM course sponsored by Bank of India. I have done my BTech from IIT Kharagpur and landed up in Bank of India from campus selection. But now I see a huge opportunity of quant finance in commercial banks of India, especially after implementation of Basel III in risk management. So yes. anything you'd like to add to that, Srijoy and Rupal? I mean, of course, I mean, if you're part of the banking industry, you are acquiring skill sets in the risk management. So I'm sure actually if you want both within your bank and I mean, in case you have an inclination to look elsewhere, you can always explore opportunities outside it as well. But yeah, anything, any advice Srijoy or Rupal have for him?
No, I was just referring to the point that for Indian banks, Basel III and FRTB definitely are the reason why these banks will have to, start moving towards more quantitative models and putting all the infrastructure in place, Nitish. So there will be a demand for quant skills for sure. But there are a lot of other, just to add to that, there are a lot of other American and European banks who are setting up captives in India. So that is also a good pocket of source of opportunity for for guys like Rajiv, because and of course they are covered by more regulations, and such as there is initial margin regulations, CCAR, FRTB, and then LIBOR transition and all that.
Correct. Yeah, absolutely. So there's a follow-up question from Tuhin. Will not take up this question much, but again, since we have already addressed this, so he says that how difficult it is to transition to a financial engineering domain, given that I don't have a degree from a top-tier college and neither the experience. I'm a computer science graduate from a mid-tier college in India, currently working in Exim Bank. So Tuhin, again, the same thing as we have all mentioned, that yeah, I mean, the tier 1 college people may have it easy in the initial phase, but since you're already part of the industry, you're working in an IT team, and if you add the skill sets, I'm sure you would have opportunities. So I don't think that's like really a challenge as long as you are acquiring the skill sets. So now the next question is from Hassan Raja Sheikh, and he says, sir, there are universities which offer full-time courses. What's the difference between the full-time course and this course? Okay. So Hassan Raja, it is more about your interest, inclination as well. First of all, full-time course is a full-time course, right? So there, if it's a good course, I mean, see, I mean, I do not have any qualms to mention that, like, if you're comparing our CPFE course or CPQFRM course with a third-tier MFE course, then I would any day say that, like, our course is more useful. Okay, I mean, very bluntly speaking. I mean, not all MFE courses are like as good as you think. I mean, I'm only talking about the top tier MFE courses when I'm answering a question now, to be very honest, right? If you're talking about like a tier 3 MFE course, even from US or UK, I've seen a lot of people actually doing those courses and coming back to India and then doing our courses to learn the practical modeling aspects. So when I'm talking about the comparison, I'm talking about the top MFE courses or top quantitative finance courses only, right? So now when it comes to top quantitative finance or top MFE courses, yes, they definitely do have an advantage because they have the luxury of time. So if it is like a full-time degree program of 1 year, 1.5 years, so they can spend a lot more time in building the theoretical subject background and all that, which unfortunately we do not have that luxury. But said that, I mean, we have tried to address that question or like problem by giving you primer modules and then again cutting out some of the theoretical stuff which actually may not be directly required. And in terms of implementations, actually, as I said, I mean, our implementations and the development and the theoretical stuff in the practical models that we teach are as good as most of the financial engineering courses. I am actually honest and do not have any hesitation in admitting, though it may sound a little pompous, but that's how it is. I mean, our courses are quite deep in terms of like the practical modeling and the deep financial engineering that we teach, right? But yes, and another aspect is you have to understand. So if you are talking about a master degree program, as I said, it's like more about your interest. Because if you're talking about a master degree program, then mostly these are full-time courses that you have to leave your job and go. And if you're talking about a good financial engineering master degree program, in US, it is like in the range of 1 CR to 1.5 CR is the course fee, apart from like your living expenses and all other things. So it's a hugely expensive proposition. Then you have to leave your job and go. Of course, again, you can, if you have an inclination to move to US and all, that gives you a direct entry mostly in US markets. But again, that's like an expensive proposition and you have to leave your job. yeah, alternate is like, as I said, there are some master degree programs which are very good programs, not maybe as top tier as like a Barclay or like a Georgia Tech, right? But again, I mentioned few universities, right? A few courses which you can look to as a master degree program. I mean, like the Sterling University courses which I was mentioning, they allow you to do at a lot, definitely relatively cheap, I mean, reasonable prices to have master degree programs in this field without leaving your job. So those programs, I mean, definitely, I mean, you can look at master degree, but yeah, in general, our courses are also quite deep. As I said, I mean, you cannot compare a master degree with a certain certificate program, but I dare say that like it covers a lot of the aspects and this, particularly the skill sets that the industry needs, right? So that's the basic question answer, and then like again, maybe Rupal or Srijoy can add to this answer a little bit.
I think just to add to Nitish, what you said, in the financial services industry, certifications play a major role.
Correct.
I mean, traditionally, when you look at an accountant, it's not
Correct.
the degree, not the basic degree, the bachelor's degree in accounting, which is, sort of gives them that credibility, but it is their certification as a CPA or a CA, and they have all these various, they keep taking certifications. The same goes for the insurance. In the modeling space, I think CQF and others are, valued more, I would say, compared to even your basic engineering degrees or MBAs and all. But having said that, yes, Nitish, you're right that in many ways, some of the firms have a certain kind of policy in terms of, in terms of what educational qualifications are required at minimum for, for applying to a job. One has to be mindful of that.
Yeah, absolutely, absolutely. I mean, in fact, actually, way back when we used to know, I mean, Citibank has relaxed that condition, but earlier in their quant team, they only used to hire actually people with master's degree background in their quantitative team. They used to go to ISI, and like even they used to go to like people who have done their MTech, not the BTechs also. So as you rightly said, yeah, these are like firm specific requirements are always there. And master's degree is a master's degree, no doubt about it. But again, then it's like an expensive proposition actually also, that like again you have to leave your job and go, and then most of the good financial engineering programs are definitely very costly. So that is like a trade-off. You have to think for your.
I think the future is a bit sort of different now from what it was in the past. Especially the cost of model, the dollar per model is rising, right? Because banks are increasingly using, institutions are increasingly using models. So they want to cut those compliance costs, the model development costs. So all those aspects are there, validation costs and everything. So clearly, the future is very different from what it was in the past. So it is not going to be the case where the team hiring policy will be limited to a few, top Ivy Leagues or stuff like that. I think that definitely a lot of firms are reviewing that, a lot of banks are reviewing that, and they're kind of trying to see for better strategies to minimize the costs and make it more, sort of efficient. The whole sort of, process of building models to maintaining models and all that more efficient, more cost efficient.
Absolutely right. So Dr. Punyani, if you can hear us, would you like to add to what actually we have all spoken about this question?
Yes. So I guess the discussion is about the comparison of our short-term programs with the master's degree programs.
Not our in general, Professor Punyani. It's like more about he wants to understand about like whether. I mean, he just in general wants to know that there are universities which offer full-time courses. So yes, and like what is I mean, there is a comparison actually, yes, in his question. So yeah, full-time course and this course. So that means our course, of course. Yeah, you're right.
Yeah, so the time investment, the cost, if you see, and as Nitish actually said earlier, the courses at IIQF are quite deep and quite extensive. So in terms of knowledge gained, there won't be that much of a difference. Now, with your long-term future, knowledge is the most important thing, because the more you can impress your senior colleagues with knowledge, the higher you can rise. And so I would say that, like, in the long term, it wouldn't make a difference whether you do a short-term course here or whether you pursue a master's degree. But yes, in the short term, it may help you to get that exposure, that Western exposure, because that's where a lot of the jobs are, and so you might actually benefit a little bit in the short term. But remember that if you actually go there and don't perform so well, then that also becomes long-term pain. So I think this is a fairly good option to pursue your IIQF education and then walk into the quantitative finance domain through consulting jobs, or through the back office, middle office. It's not uncommon that people with good skills and talent get promoted from middle office to front office, and also changing regions is not that difficult. Going from India to the UK or US is not that given the right skills and knowledge, not that out of the world.
Absolutely.
Yeah.
Yeah, I think there are
Yeah.
many examples. When I was at Credit Suisse, we did send a lot of guys. We have this short-term assignment, Nitish, program within CS. I'm sure a lot of other banks also have similar short-term assignments or internal mobility programs. So there, I think the criteria is not your, whether you've done a financial engineering for 2-year program for an Ivy League, or you have done a certification. Actually, the criteria is more like, can you perform on the job? What have you delivered in your previous role, right? Your performance on that role, and what skills you bring. So those aspects, and whether you can convince a hiring manager that you can, deliver, right? So those are the aspects that matter more.
Absolutely. So yeah. So now, like, since we are, we are already actually about time, but we'll request all the panelists. So basically, there are like few more questions. So I'll try to quickly glance through them and like maybe take a few of the important questions, and like can we extend this by like 10-15 minutes if you are all okay with that?
Nitish, I have a hard stop at 2, so I hope.
No. I'm just maybe like for 10-15 minutes. So maybe 145 or 150 will definitely stop. Rupal also has a hard stop anyway. So essentially, yeah, right. So yeah, we'll try to wrap it up in like the next 10-15 minutes. Right. So now we'll answer the questions a little quickly because anyway, like most of the points we have already covered, but like there are a few specific things I would like to address. So in some of the questions, Devabroto says that he is a commerce grad and he is pursuing his FRM level 1, want to build his career on risk modeling and financial engineering. How to start and what to start, please. So before before Srijoy or Rupal or Dr. Punyani answers, just to mention, Devabroto, you have already made a good start, right? So you have already started pursuing FRM. That's like a good certificate program in the risk arena. It's like globally the most recognized course in risk management as well. So in terms of a start, that's a good start. But yes, maybe just to add a little bit, you once you have done your FRM, or maybe even along with your part 2, start learning the modeling skills. Like FRM is like very good with the theoretical stuff, but unfortunately the model of the course is such that like you don't have the scope of learning the actual modeling. So try and learn the modeling stuff, so that actually would be even more useful. So but you have already made a good start, and then I will let Srijoy and Rupal add to that.
No, I think I completely echo your points, Nitish. Nothing more to add there.
Right. Rupal, anything you would like to add? No, we can't hear you, Rupal. Oh no, we have lost your voice.
Audible?
Yeah. Now we can. Please.
So I was saying that I mean definitely any modeling course will be really helpful, as you correctly pointed it out. Anything on tech side, I think apart from domain, as I continuously been mentioning that should really
Right.
help you gain that understanding.
Absolutely. Right. This is like an important question. Actually, a lot of people ask this question, so maybe if we can answer this quickly. So, Vaibhav Malviya, he asked, what is the basic difference between an actuary and a quant, since both have almost same skill sets? Actually, this is like a question I have actually heard a lot, and again, from while having discussions with prospective participants and all. So, yes, Professor Punyani, would you like to address this question first? What is the basic difference between an actuary and a quant, since both have almost same skill sets? Professor Punyani, can you hear us? Unfortunately, I think there is a little problem on his audio. So, Srijoy, would you like to answer that?
Nitish, I would pass over to maybe Rupal. I'm not very familiar with actuarial. Only one point I can say there, Nitish, is I think it's an industry which really is right. So quants are employed throughout, not just in insurance, but you have employment in banks, hedge funds, trading houses, and all that. Actuarials are more limited to insurance companies, and maybe their expertise is also more limited to the world of insurance.
That's correct. That is correct, actually. Rupal, you want to add something to that?
No, I think Chef fairly pointed out. Actually, the risk in actuaries industry or the insurance industry is different from the risk that you are calculating here. Here, the risk is more driven towards generating the PNL, and there the risk is not towards generating any kind of PNL into that aspect, like the way we are doing. We are trading options, let's say, or you are trading futures here, so that you are putting in money so that the market goes up and you earn money out of it. Whereas in insurance industry, it's a different ball game altogether. How many claims that you are coming in, how claims they are settling. Based on that, you are getting to get more premium from people, and just limited payout on that aspect. So there is no as such market which is going up or down, or a trading kind of thing is happening, which is happening here in this case. So the different industries itself tells you the thing. And apart from that, even the skill sets are also a bit different. I will not say the skill sets are same, except for modeling part. So if I say that the skill set for a software development company building anything is also same, because they are also looking for Python. But we can't say that the Python that we are using and the Python that they are using are same. Even a gaming company is also using Python. So the industry, so the use of Python in gaming industry is more on UI side, more on other aspects like how you are building your website, how is the look and feel. Here we are least bothered about look and feel. Here we are bothered about results. So skill sets, although are required same, I mean, skill set is Python in both the cases, but still that industry, the skill set is in a different aspect, and the skill set of Python here is a different aspect. Understand that difference. I mean, actually, in the industry, the modeling skill set is also in a different line, and here it is into a different line.
And one more thing to add I mean, I agree with you, Rupal. The one more thing to add, Nitish, is
yes.
I'd say when we want to transition from an actuarial career to something else, to a quant career, I think you have to look at the cost benefit. So what is the benefit of already you have done a full let's say an actuarial course which involves, I don't know how many papers, Nitish, maybe 30 papers or something, and these are very tough papers to pass.
Very tough
exams to pass. So once you have invested your time in that, one would expect you to build on that, right, to get some return. So why would you sort of completely squander that and move to quant, where you're kind of again you are sort of normalizing yourself with the rest of the quant crowd. So that is one thing, one consideration that one thing to consider, I'd say.
Very true. Very true. Very true. To summarize, actually, Vaibhav, as both Srijoy and Rupal has mentioned, you are right. So I mean, if you see even the actuary the papers, I mean, at least 70% to 80% of the papers actually the same subjects are taught as in any financial engineering course. The difference is in the applications. Here you are applying to the quant. I mean the banking industry, right, for the valuations of derivative risk management and all machine learning and all these areas. Whereas in the actuaries, you are applying the same skill sets for actually basically what do you call calculating the premiums and all those stuff. So basically insurance specific to insurance. So it's like more on the application, but you are absolutely right in terms of like the basic skill sets, like the mathematical knowledge, even like a lot of the derivatives and all are taught in the actuaries courses as well, right? So yes, the basic knowledge is common. The difference is in the application, the industry that you are applying to. Right, so that's the major difference. But as Srijoy rightly pointed out, actuaries are like very tough courses to clear. So if somebody has done that, so unless somebody is extremely interested in the financial markets, I don't see any reason for them to actually squander their hard-earned actuarial skills to move into quant, where actually you will be normalizing yourself, as Srijoy rightly pointed out. Right. So next question is from Abhishek. Abhishek says that like one of our panelists mentioned that skill set required in FO and BO is different. I would request the panelists to please explain this if possible. That is, specify the particular skills that is aligned with FO or BO quant roles. What could be the domain? No, that's the question. Is aligned to FO or BO quant roles. So that part actually was like the part of the talk of whose speech actually? I mean, were you able to hear the question?
Yeah, it was from Amit, I think.
Yeah. So the Professor Punyani, if you are there, if you can hear us, would you kindly answer that question? Dr. Punyani, can you hear us? I think there is some problem with his audio. Apologies for that to the entire audience. But yes, can Srijoy or Rupal then again answer his question? So he says that the FO and BO, I mean, how is the skill set different? And he requests the panelists to explain the specific particular skills that is aligned with FO or BO controls.
One thing that I would like to add is that FO is more stressful, BO is not that stressful. That's one thing. But apart from that, I think in FO you are mainly working on directly trading in the instruments, whereas in BO you are not directly involved in that trading aspect. Rather than that, you are supporting the trading. When you are supporting the trading, of course, you you do a lot of post-trade analysis as well, not only within the trade. Whereas in case of FO, you are actively involved in the trade. When you are actively involved in the trade, you have to look at multiple aspects. As in BO, you can focus only on one aspect. So let's say risk only you can focus on in a kind of BO role, but in FO role, it's not only that risk that you can focus on. Risk along with PNL, along with other factors, along with regulations. There are a lot of aspects that you look for. You have to look for when you are working for an FO. But in case of BO role, you can just particularly fix into one aspect and make your career streamlined into that one aspect, like say of risk, of product control, of valuation, of you are any one aspect. So it's your choice whether you want to be doing an FO, mastering all these lines, or it's just a BO where you're significantly focusing on only one area.
Correct.
I would just like to add one thing, two things, Nitish. One is FO role is very high pressure role, so you have to be prepared for 100 hours a week.
Yeah.
Yeah. So I mean that's a difference really. That's a big difference in terms of work-life quality. The other thing is, Nitish, within FO also there are a lot of specialization. You have credit class, asset class, then you have rates, you have FX, you have commodities and all. So I think it's not easy always to sort of to build your specialism in all these different areas. So I have seen that there are FOs who have only focused purely on the credit risk, on the credit assets, or
Right.
be it, and rate itself is so complex. So that is one thing, I mean, that is one kind of difference. Whereas on the BO, I would say, as Rupal rightly pointed out, you have exposure to, let's say, working on risk models, and then risk models of all the asset classes and stuff like that.
Correct. Correct. You're absolutely right. Yeah. Yeah. Okay. So the next question is from Kirti again. So Kirti says that, like, again, what could be the domains I can work with a background like BSc Maths Honors, MSc Maths, FRM Level 1, and Python knowledge. So Kirti, you are equipped to work in any of this domain that we have in the quant and the, all the domains that we have talked. You have the basic background. Yeah, I mean, if you wish to actually go deeper in terms of skill sets, you can add. But as far as basic background is concerned, I mean, you are well qualified to target any role in this industry as an entry-level position. I do not know more about your background, but as a general background, you are quite equipped. For the paucity of time, like we have spent a lot in this type of questions, so I'm not going deeper into that. Now, actually,
one thing I would like to point, Nitish, is as much as it is good to have all these certifications and prepare, all this, I would say, preparations in advance, but also the readiness, Nitish, is important, especially ability to perform on the interviews. I think one aspect.
No, actually, just to interrupt, actually, in fact, actually, you may talk about that along with the next question that Abhishek has, and that question actually Abhishek specifically has for you, where he says that, like, how do you judge candidates' readiness in the interviews? And I'm not just referring to skill sets here. So exactly to the point. So essentially on the cue to the answer that you were giving. So yeah, I mean, you can take that question together with that.
So I think to answer both of them, I think readiness is so important, especially how you communicate. One thing is, Nitish, you have done the certifications, you have done a project. Another thing is to articulate and communicate about what you have done, what are the challenges you faced, and what sort of problems, articulate those complexity in the problem, and then bring out what solution you proposed and your approach to it. So what we're looking for is essentially your approach, because that is what will kind of distinguish, a top performer in an interview from the average performer.
That's correct. That's correct. So we'll quickly go to the next question.
Just emphasizing the communication bit, Nitish, it is not a sales communication. It is more like your ability to explain, articulate complex technical points. I think this will also, this is something which will play
very
a big
fair
role.
point. That's a very fair point.
Yeah,
that's
and
a very
play a big role, Nitish, in the progression as well, because essentially,
that's a very
as a
point. I mean,
you have to explain your work to the senior leadership and senior managers and maybe the partners who don't even know what is a Gaussian distribution, right? So it is an important aspect that should not be ignored.
That's actually a very fair point. Hello. Yeah, that's a very fair point, Srijoy. In fact, actually, this is like an area which is very less talked about. Your presentation and then the other skills. This is like a very important. I remember once actually many years back, Mr. Rajan Gadkari, who actually I mean, has been working in has worked with in leadership positions in many quant teams in Wall Street. So he actually came to India when BNY Mellon was setting up their quant team in India. So he was specifically sent here to actually just to guide them to set up their quant team here. And we were fortunate to have a talk from him as well in one of our realizations. And he specifically gave a lot of stress on this. I mean, the communication and the presentation aspects. He talked about, like, yes, quant skills and all, and these are all good, but again, you need to communicate your ideas to your team members. So essentially, this is something which is very much overlooked, and it's a very important aspect that actually you have raised. I mean, yeah, I'm glad you talked about that. Right. So Now, quickly to the next question, again from Vaibhav, and he says that why does India doesn't have master's level financial engineering courses, universities, even IIT Kanpur started online courses, MS Internet only recently, earlier this year. Vaibhav, again not a very easy question to answer, given the fact that academically as a country we are very strong in terms of the mathematical abilities. So yeah, there has been few universities which have actually started mathematical finance courses, computational finance courses earlier as well. I remember a course in Bhubaneswar. I am a Bhubaneswar. There was in Chennai Mathematical Institute. Even ISI nowadays have some specific courses which they have tried to. But unfortunately, what happens is like I mean, my thoughts. I might be wrong, but again, from my experience and like I mean my interactions over the years, this is maybe to the fact that there are not many. I mean, in India, the interaction between the academia and the industry is not as strong as in Western countries. Right. So here actually there's like a huge segregation. Academics don't do much of consulting, and the consultants or the professionals, they don't go to the academia much. So there is like a veil, and particularly in this kind of applied fields like financial engineering, if that interaction is not proper, then again these are unfortunately subjects which cannot be taught in silos. I mean, a person needs to have that industry exposure also along with the theoretical background. So maybe that is one challenge we face in India because of the lack of industry and academia interaction in this field. People like Dr. Punyani are very few who have worked in leading quant roles and then have moved back to the academia. I know few people like Dr. Ranjan Chakravarti and all who have moved into academia. But this kind of people are very, very less, where actually people from the industry has moved to the academia, or the academic people doing good research in the financial engineering domain for some reason, right? So probably that's the main challenge why like we have not have had much courses in financial engineering, because at the end of the day, this is like an applied field. And in this field, actually, as I said, I mean, only theoretical stuff will not do, and neither only practical stuff will do. So it has to be a combination of both the theory as well as the practical stuff. So that is maybe one reason. Maybe Dr.
No,
Punyani, if you are aware, or Srijoy and
I will just say one thing. Absolutely, you are bang on. Regarding there would be other explanations, I'm sure, but this is a very great point. A good example is, Nitish, you have professors in Columbia University, also head of pricing or head of functions in Bank M and JP Morgan and all. You don't see that in India, right? So you have that thing as an example. Plus, the Indian university system is so inflexible. They only they have these they have their inflexibilities. Let's live with them. So, and as rightly said, Indian professors don't really consult that much with industry. Plus, the hiring and the whole system of the university teaching is pretty rigid. It's pretty rigid and pretty sort of, I would say, a bit outdated. And not being too sort of harsh about it. But we have to. That's it. It is what it is, in my view.
correct. That's correct. And the next question is from Abhishek, and I think that's for me. And he says that like, do we cover quant models in CPFE course? Yeah, Abhishek, that is exactly and precisely what we cover. Of course, it is not only about the quant models. Our courses are like a very good combination of the theoretical background and the actual modeling that we teach. I mean, there cannot be modeling without first building the theoretical background, right? So but yeah, the end result is that like in our courses, all the practical actual industry grade modeling is taught for all the derivative asset classes. So when you talk about quant models, yes, the CPFE course we take up all the derivative asset classes, be it the equity derivative valuation or interest rate derivative valuation or the currency derivative valuation, commodity derivative valuation, credit derivative valuations, and the swaps valuations and all that. So these are all taken up in deep, both understanding the latest models that are used in the industry and then actually teaching the implementations in Python, right? So this is what we do in deep. So yes, these are quant modeling in the CPFE course is quite extensively. I mean, for paucity of time, actually, we will go into the next question if possible very quickly. There are similar kind of questions which we are skipping. Okay, this is an important question from Simi Jaglan, and he sorry, I do not know the gender, so I'm not saying. So essentially, the question is, I don't know he or she. Apologies for that if I'm mistaken. But anyway, it's doing a PhD from IIT Delhi, theoretical physics, and working with C as language. How easy or hard it would be for me to opt for a career in quantitative finance? What all skills courses should I focus on developing during PhD? So yeah, I mean, again, just to check if Dr. Punyani is able to hear us, that's like the question best answered by him. So
Yes,
if you,
yes. Yeah, I think excellent question. Yes, I think a PhD in theoretical physics is still a good background for a quantitative job, and I think you would be best off trying to, pursue a short-term CQF like course like the one that IIQF offers, and you just need the knowledge. Actually, you don't need a degree because a PhD in theoretical physics would entitle you to a quant job. So you need to speak to some of the recruiters once you're done with that, or when you're close to being done with that, and get a job as a an associate level quant job in any of the banks or consulting firm,
correct.
and that's it, and you should be all set.
Yeah, absolutely, absolutely. And
And
I mean,
just to
there
add
are
to
few,
Amit's point,
please.
I've also hired a few PhDs in earlier roles. So yeah, we can look at that sort of segment, and we have been very happy with with the results.
Absolutely.
I mean, just to say that financial engineering is not the only degree. So even a PhD in physics, in fact, a lot of stuff in financial engineering is covered in the PhD physics course curriculums. So as Amit said, it's pretty much they prepare you to be a seasoned quant. But in addition to that, Nitish, I would only add that she should work on communication skills and presentation skills, which will help her to sort of secure top-notch jobs in big banks and consulting firms.
Absolutely, absolutely. So similar background. Another question from Himani. So she also come from academic background, PhD and postdoc in physics. From last 2 years working in service industry as a ML engineer. Which domain will be appropriate for me in finance field? Which skill set I need to focus? Himani, this is absolutely the field where you are most welcome. Finance engineering is like a field where physicists are very, welcome with very warm hands. So if you want to make a career in finance, this part of finance is tailor-made for you. In case you are interested, finance engineering is the domain to go for. And along with that, you already are working in like the machine learning domain. So machine learning, as with everything, is like a very deeply used skills in our field of financial engineering as well. So I'm just quick, since we answered that question quite elaborately, Professor Punyani also answered that quite elaborately. We are not going deeply into that question, but yes, to summarize, this is the perfect fit for you, Himani, in case you want to move into finance. And if you wish to, it may or may not be required, but if you wish to, you can actually add the little bit more domain knowledge from this kind of certificate courses. Abdul Wahab says that he works as a credit administrator having over 15 years experience. As Mr. Srijoy suggested to upskill our skills in order to keep up with the market, I would like to know which will be a good course or certification for me to keep up, keeping in mind that I have been away from studies for more entire career after my graduation. Okay. So I think just to start with, I'll start the answer, and then if you want to add anything to it, so essentially, I think the best course would be the certificate program in quantitative finance and risk management, given that you have a risk flavor already in your profile, because this is like a more risk focused course and a little less heavy on the maths. So from my side, as far as my opinion is concerned, this is the right course I would like to suggest. Or maybe a simpler course from some other institute. There are not many actually, but if you want to ask me about a course that from our side that I would like to suggest, the certificate program in quantitative finance and risk management course would be a little course which I like to suggest, both because it is a little less maths heavy, and then again, since you are out of touch with your studies, and also given your given your the job profile. So overall, this would be the right course. But anything that Srijoy or Rupal would like to add?
No, Nitish, I think you answered it pretty well, quite well. Yeah.
Right. So Alex says, what a model risk analyst do in a day at an investment bank. So this would be actually our last question, and we would have to call it a day. It's like already 2 o'clock. But yeah, before discussing, this is like the last question probably if we can answer. Shall I repeat the question? Maybe Srijoy and Rupal can answer this. What a model risk analyst do in a day at an investment bank? So basically, he wants to know the day-to-day work of a model risk analyst at an investment bank.
There are two aspects of it. One is model validation and the other is model development. If you are a part of model development team, then there will be an ongoing model development that you have to continuously work upon. So when I say model development, huge models are already being built up. You will be part of at a junior level. I don't think they are going to directly hire you as a director, but at a junior level, you will be just part of one subset of that model, where you will be writing a file of code that will be contributing to that model. How to better improve that code, how to improve the efficiency of that code, that is one thing. Plus, keep on writing the code so that it is easy to understand for others, and the best code that you can write. I think that will be a model development aspect of it. Plus, keep on understanding what is the requirement. In a model development team, there will be some senior traders or some senior folks from QR team who will be working with you. So they will give you the requirements, and you have to fulfill that requirements by writing the code continuously. That is on the development side of things. On the validation side of things, that the models are already in there, you have to validate those models, so you can keep checking that whether models are working perfectly or not. So with the current data that you have, if the model are giving the provided results or if they are not providing the correct results. So these two aspects.
Absolutely, Rupal. I think Nitish, I also cover some of these model risk management aspects in the courses that I take. So we can definitely have detailed discussions, there. But just to add to what Rupal said, a typical day of a model validator is essentially testing, looking at the design aspects, the performance aspects of the model, and the implementation. So they have the whole sort of schedule planned out over a period of 1 month or 2 months, and essentially the job is different from a model developer, because a validator has to validate several models in a typical cycle of, let's say, 6 months or 1 year. And if it's a regulatory program, then even it is even more intense.
Correct. So
Ridnesh, I'll be covering some of these model risk management aspects in some of the courses I take. So I also spend some time discussing about, because this is a very important area, and actually it's a more prevalent area now. So almost all the modeling is coming under this whole framework of model risk management now. So starting from model development to validation to audit.
Absolutely.
So
yeah, that's absolutely aptly put, Srijoy. So what I will do is maybe since we are already past 2, there are a few more questions, but maybe I will take some of the questions, but I will not hold on to you all, because you have hard stops at 2 o'clock, and then few of the other questions are pending, which maybe I'll try to take up myself. But since you all have hard stop at 2, maybe I will. You may actually drop off. But before that, I would like to sincerely thank for all of you for joining in, Professor Punyani, Rupal, Srijoy. Thanks for taking your time out and such wonderful insights and thoughts. I'm sure all the participants actually have gained a lot of knowledge about this industry, on how it works, what are the skill sets, how it is progressing, what are the things they need to do. So it was very, very kind of you all to share your thoughts and knowledge, and taking your time out and spending time with us on this. Thank you so much for joining. So the participants who still have questions, few of them I'll take up, so please be with us. But yeah, I mean, in the meantime, as I said, the other panelists have hard stop. So I mean, it is always good to interact. We are happy to interact, but again, we are half an hour past the time allocated time. So we'll have to allow Rupal and Srijoy and Dr. Punyani to actually leave. But I will try to take up some of the other questions before we end the session. Thank you, Rupal. Thank you, Srijoy, and thank you, Professor Punyani.
Thank you, Nitish. It was a pleasure to interact with you and the audience. Thank you very much.
Thank you so much. Thank
Have
you
a nice
so much.
weekend.
Thank you. Yeah, thank you. Thank you. You too. You too. Right. So going to the next question is from Kamlesh. Kamlesh, you have done your MBA, you have done your Masters of Financial Analysis, you have a FRM2 candidate with 15 years of experience in regulatory reporting, finance change management. I want to know how much calculus would be required and practically used in financial engineering. How could I improve on calculus knowledge if it's necessarily required, and also which tech skill I need to develop? So, Kamlesh, there are two aspects. One, since you've already done your FRM and all, so if you want to stick to risk management kind of profiles, then FRM and the courses that you have done, and since you're already working in the regulatory reporting and all this side, if you want to go deeper, then probably the only skill sets that you need to add is like to also understand the practical modeling of the things that you have learned in your FRM. So if you're looking at courses, the quantitative finance and risk management course has actually two entry points. One is of course from the beginning of the course, and the other is as a lateral entry. If somebody already has a good background in terms of the basic quants and financial market products, like you who have done an FRM, then we allow them to skip the first 2 months of basic theoretical part and join from the third month of the course. We call that a lateral entry, where we actually start with the application areas, machine learning, theory plus actually implementation in Python, all the valuations of derivatives of all asset classes, equities, interest rate, currency, commodities, swap valuations, understanding all the asset classes, the valuation models in deep and implementing in Python, and then understanding all the risk analytical areas, market risk, credit risk, operational risk, Basel implementation, liquidity risk, then going into international regulations, performance analytics, portfolio analytics, and performance attribution, all this area, both theory plus actual model building in Python and all that, right? So one, you can do this, and of course that will give you the practical modeling skill set from the areas that you already learned. So that will be useful if you are wanting to stick to your current kind of profiles. If you want to go more deeper on the quantitative aspect, then a course like certificate program in financial engineering will be more helpful, where actually we go more deeper on the mathematical side, so which is much more mathematical than, say, for example, your FRM course. And then of course the practical modeling that is taught in this course, that's an additional knowledge anyway you would need if you want to go deeper. So, but yeah, I mean, since you mentioned about like in being out of study for quite some time, so that course is very mathematically intense and heavy. So that is something you need to think twice before going into, because that course is very intense and heavy. But yeah, depends on what kind of skill sets that you want to add. So if you want to add on the practical modeling side of things that you have learned in your FRM and like with the work that you do, then the lateral entry to the quantitative finance and risk management course is good enough. Whereas like if you want to go more deeper in terms of the mathematical modeling side, the core financial engineering side, then CPFE is the right course. Okay, now going into the next course, question. Kamlesh again says, which skill tech I need to develop? So as we have already mentioned, the domain knowledge of financial engineering plus the actual implementation knowledge as well, where actually mostly the most used tool is Python, particularly if you're starting out with. So that's like a good skill to learn, Python-based modeling in this area, right? And that's definitely taught quite extensively in our courses. Okay, Abdul is like he says that he has done his PhD in finance from Rayalaseema University and graduated from Osmania MBA Finance. After 2 years leasing and financing experience during my early years, I entered academic teaching since 1999 and works as expatriate university lecturer. in Ethiopia and Saudi Arabia. I wanted to ask whether I can transition to AI and ML. If yes, what skill sets will be required to get certified and make a career transition? See, in AI and ML, if you're particularly looking at AI and ML transition, yes, there are like so many courses available by many institutes. You will have to search, maybe the general Google search and all that. Yeah, I mean, courses, there are places like Coursera and all those kind of edX and all, where actually you also have a lot of courses in machine learning and data science and all these areas. If you want to learn machine learning specifically applied to finance, so one of the courses that we already have, you can do. As I said, all of them has a machine learning flavor. Or if you want to really, I mean, and also we are coming up with more specific courses for machine learning and finance. So that is also something you can look at. So these are things you can do. But I mean, if you are looking to transition to AI and ML, it is like advisable that you actually do some courses in machine learning and artificial intelligence properly. There are a lot of courses to be looked into. I mean, done by private institutes, all the leading government institutes, IITs, IIMs, and then machine learning and data science is something which many institutes offer. So you'll have to do your research. But yes, you can do some courses on that, and then again try and make a transition. Good thing about machine learning and also these are still fields where actually is like evolving. So a lot of people, after gaining the skills, they are able to move into this field, even if they come from a different background, as long as you acquire the deep skill sets. Okay, Rishi says, would you suggest a guide anything about MSc in finance and investment from University of Bristol, UK versus CFA, along with some other certification courses like IIQF and financial engineering in India? So MSc in finance from Bristol, or specifically, I'd not like to comment, but any good MSc course has its own advantages. And additionally, if you can do more certifications, that's always an advantage. As we mentioned, I mean, we already had a very detailed discussion regarding MSc vis-a-vis certificate programs, but MSc along with certificates is definitely a good way to look at it. I mean, master's degree always adds an additional value. It may not be only Bristol. As I said, we have some other UK universities as well, which are offering courses at much cheaper prices from their Asia campus, and we are also partner with one of them, the Sterling University, which you can look at along with your job. So maybe that is also one option you can look at. And yeah, I mean, CFA is another course which is considered a gold standard in terms of like the investment finance courses. So basically, see, Rishi, I mean, you cannot do everything, but the more things that you do, the more your profile is stronger, right? So that is how it is, right? So if you do CFA, I mean, if you do a financial engineering course from IIQF, you do a master's in finance with that. These are all, again, if you can do so many things, it's definitely a very big profile that you will be building in that case. So this is like a question from Lamunicium Gante. So, okay, so he's actually an alumni from IIQF. He has done a certificate program in quantitative finance and risk management. I'm giving this background because that's important for his question. So he says that he is an IIQF alumnus and definitely one success story. His background wasn't in finance, leave alone anything approximating quant's degree, but courses in IIQF expose you to mathematical machinery and tools needed for quant jobs. I am with the Big Four Consulting in their market risk model validation team, engaged in projects like CCAR and IFRTB. So essentially, he actually got that job after our CPQFRM program. So yes, if somebody is serious enough and learn all the skills that are taught in our courses, these courses are pretty deep and definitely builds a background for you to actually make an entry into this field, even if you come from a different background. So like Lamunicium, you can utilize these courses to make an entry, as I was mentioning earlier, right? Going to the next question. Thanks so much for Lamunicium for sharing your thoughts. Really appreciate that. All right. The last question is from Simi again, and he said, "How can we try having some industry experience in the field alongside PhD?" Simi, unfortunately, it's like not very easy to get like an internship kind of things in an international banks. It's not very easy, but yeah, I mean, you can try. Of course, you can look at internship opportunities with maybe some of the quant trading desks and all that, proprietary desk or broking firms and all. But it's not very easy. I mean, it's much more easier to get a job in this field, to be very honest, if you acquire the right skill sets. And again, just like to add that since as all the panelists were mentioning, right? So our courses actually teaches both the theory plus the practical modeling. So that's like as good as, or like maybe much better than doing an internship, right? So doing an internship, because you actually would get to build the models in the course. So that can be really useful. I mean, if not an internship, that practical modeling skill set can be really useful when you are applying jobs in this field, right? So hope that answers your question. And the next question is from Hassan Raja. He says that, is there any difference between Western and Indian quant industry? No, Hassan Raja, the world is like are much connected now, and particularly when we talk about the quant industry. So even when we are talking about Indian teams, as the panelists mentioned, right? So most of the work in the quant modeling it happens for international banks, right? So even in India, of course, the risk management jobs are there. I mean, work happens in all kinds of banks, including the Indian banks as well, right? But overall, there is no difference. I mean, the work that we are targeting actually are like majorly, if you're talking about actual financial engineering jobs in the quant modeling and all that, particularly for the quant trading, derivative valuations, modeling support and all that, majorly are part of international banking industry, even if the roles are based out of India. But that does not mean that like the Indian banks are not working on that. Actually, we also have a lot of very advanced risk management teams. Some of the Indian banks also have like quant modeling teams. Even the regulators like RBI and all, they have good teams and all that, right? So, but there's not much difference between Western and Indian quant industry. There's no difference. I mean, it's like all it's just a part of the same industry. Of course, the depending on which country you are working in, the regulators may have allow you to do different kind of or different level of jobs, right? Say, for example, our Indian banks are not allowed to trade that heavily in derivatives as like Western banks are allowed, right? So that aspect, yes. But in terms of risk management, or even in terms of the jobs that the students from our courses target, are part of, like, again, they do the same quant job that like a person like in US or UK will be doing, because they are in anyway mostly part of the international banking industry, whether they are part of the international banks directly, or whether they are working in like the top 4 consulting firms like PwC and EY and all that. So or whether they are working in the IT companies supporting the international banks, hedge funds and all that, or the independent consulting firms. These are all part of the international quant industry. So there's not much of difference actually. Right. So, I mean, we are about 45 minutes past our allocated time. Yeah, thanks, Hassan Raja. You too have a great day. But like as I said, good that we could take all the questions. Okay, one more question from Abdul. I'll try to address that very quickly because we'll be closing the session now. So, do you have any certificate on a fast track or full time? As I have 1 month summer break, want to devote full time. Abdul, no, we do not have any fast track programs, but there can be some ways where you can do some of our programs fast track if you have relevant background. For that, we need to have a separate background in terms of your overall background and all that. So our contact number is like given, if you can see my screen. So please note that down, and you can contact us, and we'll try to guide you on what can be done regarding like your fast tracking your learning. Right. So with that, we will end the session for today. Once again, thank you all for joining in, taking your time out on a Sunday. I hope you all had good, fruitful session. I mean, the panelists shared very important aspects of the industry, the knowledge. So I hope you all found the session useful. Thank you all for joining, and see you again in the next webinar. Do keep track. We conduct these webinars regularly as part of the series of like the series of deep dive with IIQF experts. Thank you. Thank you.